All right, we've got Mr. Singh joining us now, CEO, Policybazaar.com. Thanks so much for joining us, Sarbvir, this morning. Lots to talk about here, of course. I want to kick off by discussing a couple of pockets there, for example, insurance and how that's remained one of the most underpenetrated segments as well. Lots of growth prospects that we're anticipating there. And of course, fintech also will help to disrupt that. What's the kind of scale of opportunity that you're currently seeing? It's not necessarily a new phenomenon, so I want to get your deeper perspective on how things have shaped up in the last couple of years, and now whether you're seeing a more distinct move in terms of scaling up going forward.
Yes, sure. So obviously, with the COVID and everything else, I think health insurance, has been top of mind for consumers in India in the last year. So if you just stay with that for a second, what we've seen is that health insurance, has grown very strongly this year. In fact, at the end of this year, it's quite likely that health insurance will be larger than motor insurance in general, in the GI category. So which is quite a big step, because traditionally motor insurance has been significantly more than health insurance over the last, many years. And finally, I think as people have understood the need for health insurance, the need for the fact that hospitalization costs can be very high, that has broken that inertia, and people have started buying more and more health insurance. So I think that is health insurance is a good way to look at the broad trend. So the two main trends I would just say are that people are buying more and more protection products. So that is health insurance, term insurance, and people are buying things digitally. So I think that I'm sure is no surprise to you and your viewers that people are buying more things digitally, and that I think is something that we are seeing in insurance as well.
Okay, so definitely seeing the impact, coming in of all the current circumstances. Now, being a dominant player clearly in the online web aggregator market, and looking at the current dynamics, the bent towards digitization as well, how do you see digital distribution of these policies going forward? Is that going to be, the mode of choice? It already is to a large extent, but what are the shifts that you're seeing in patterns and the way people are choosing to go ahead with their policies?
So I think, again, there are 2 or 3 points there. The first is that if you just compare with 4 or 5 years ago, I think less than 5% of insurance policies were bought online. And I think that number now stands, over 15%. So that is a major shift that has happened over the last, 4 or 5 years. People are, buying digitally. I think this has also been, created or driven by the fact that in the last 12 months, the regulator has made it very clear that having a soft copy is as good as having the printed version of a policy, and this is a very important step which makes people feel a lot more comfortable with buying digitally. So I think that is one area that has seen significant movement. I think the second area that has seen movement is that as things became more difficult, right, where people were not able to go out, especially in the earlier parts of COVID, and meet agents or go to their bank branches, I think naturally they gravitated towards buying and researching policies online. And again, our teams and people like Policybazaar were able to help consumers and explain to them, why they should buy online, what are the benefits, how easy it is. And I think once your habit changes, and this we've seen across industries, once your habit changes of buying things online, you tend to stay with it. So I think those, I would say, the big, broad trends.
Sure. Sarbvir, as we understand, not just you, but the entire industry per se is witnessing a sharp increase in awareness as well as demand for high cover protection policies. What is your own sense of what's really happening on ground?
Yes, that's a very important question that you asked. See, I think there is a need. Healthcare costs have been going up almost every year. We all know that healthcare inflation is a big challenge for society, for the country at large. Now, one thing that people will have to start thinking about, and again, COVID has helped focus on this issue, that if you're hospitalized for 10, 12, 15 days, a large, the bill can be extremely large, and this could be well beyond what a normal household or family can take up. So what we have seen is that we have introduced products which are having a cover of up to 25 lakhs, 50 lakhs, and even 1 crore, which is one of the most successful products that we've had. Now, there we've seen that almost 35% of our overall, policies are now these high sum insured policies. And I think consumers are getting the point that they need to protect themselves against much larger, financial commitments that could arise versus earlier where, the concern was less and people were buying, smaller policies. So on average, our sum insureds have increased from, let's say, around the 10 lakh, per family mark to now over 20 lakhs. So that's quite, again, a big shift in the last 12 months or so.
You raised a very important point, and that's exactly what I wanted to ask as well. At a time when you've got near zero interest rates globally, back home as well, we're in a low interest rate regime. Everything from our homes to all other, essentials, we are paying less for in terms of just interest rates. But healthcare in particular, and the point that you were making about healthcare inflation, do you think we're going to go and pay or continue to pay more for healthcare going forward as well? Is this a trend in place in that sense?
Well, I think whichever way you look at it, it seems to be, as you know, very hard to predict the future. But based on whatever we can see today, whether we look in our country or we look outside, healthcare costs have been going up. So it is quite likely that this will be a continuing trend in India as well. I think now there are obviously many facets to this, but again, just staying limited from an insurance perspective and from a consumer perspective, what I would say is that families, have to protect themselves against this risk because, however much you may have saved, but one incident like this, and, we know that there are many serious diseases like, let's say, cancer or something like that. If that happens to a member in the family, it can, set your entire financial plan back by many, many years, and it takes a long time to recover. So I think in that sense, these high sum insured policies are a good way of protecting yourselves and, covering against these eventualities. The good news also is that these policies at this point are actually relatively economical, and they tend to cost only about, 25 to 30 or 40% more than a smaller, sum insured policy. So I think to that extent, it's a pretty good bargain for Indian consumers at this point.
Zerodha disrupted the digital business for brokerage.
Right.
Do you see a disruption happening? And a disruption because in insurance, the premiums are still very high. So the margin and the loss is so high that if a disruption happens, even the disruptor will make money.
I think, the way we see it right now is that, as you know, the economics of the business, have many parts to it. So it's not like, insurance companies or the insurance industry is making, humongous amounts of return on capital or something like that. It's a competitive business. There are 55 insurance companies in India. And even globally, as you know, it's a very competitive business. So I think without getting into too much around, any one part of the industry, I would say that it's something that is, again, always every industry is open to disruption. As you said, we were one of the first to enter and build a large digital book. We, of course, continue to, focus on many other initiatives that we have going on. And I'm sure others will also look at this opportunity and come in. But I just don't want to leave you with the impression that there is some very obvious thing which is missing. There are reasons for why things are how they are.
I'm not getting into specifics of Policybazaar, so my intention is not to get into that, but I'm just trying to understand something more on the disruption. What kind of disruption do you envisage? Do you envisage disruption in terms of technology, in terms of commission structure? Do you think that, like I said, Zerodha was the disruptive moment for brokerage industry, Jio was the disruptive moment for the telecom industry? Do you fear something like that could happen on the insurance distribution? My question was specifically to distribution.
Yeah, I'll just, go back to basics. I think insurance distribution, is being disrupted, and just like any other distribution, as consumers, finally we have to follow the consumers. As consumers are changing their habits, as they are, researching, buying, getting more comfortable in buying online, I think the same trend will happen in insurance as well. Now, some of the examples you've taken are a bit different because there was a cost structure, opportunity over there where you could say that, let's say the marginal cost of doing business was very low, and hence, some of the names that you mentioned could come in and say, okay, fine, we are taking the commission to sort of in a virtual way to zero. But I think the opportunity over here is slightly different. I think what are the key problems that insurance distribution needs to solve? One is that it needs to make products accessible to consumers. Even today, insurance is not the easiest thing to understand. Policies can be very complicated. They're difficult. There are lots of conditions. So I think one is the simplicity and ability to choose the policy. And the second is the delivery of the policy and the claim. So we must remember that insurance is a very different type of business where you pay in advance and you get the benefit later. So from a consumer perspective, it's very important that if the incident occurs, if the event occurs, they are clear and it is very straightforward as to how they will get paid and when they will get paid. So if you see the innovations, the disruptions that are happening, I think are happening in both these areas. One is in how easy and simple we can make it to buy insurance. And the second is that when the moment of truth occurs, when there is a claim, then the insurance industry is able to make it easy for the consumer. And I just want to take one more second to explain that it's not just about distribution versus manufacturing or anything else. As you know, now the world is divided into ecosystems. There is no longer I would say separate parts of the industry you can look at it. So we are part of an insurance ecosystem, and consumers expect us not only to sell the policy, but also to help them when there is a claim. So I think we have to look at it in a holistic way and not just, I would say, look at it as distribution versus, something else.
Okay. There was a time when the digital business was only restricted to few cities, and small towns it was still the, corner uncle who would call you, beta LIC leni hai kya? How has that changed for you? Have you seen a complete big difference in the way how the small towns are now buying, let's say, policies, whether it is on your platform or other platform?
It's a slow burn. I won't say that, the things have changed dramatically. LIC remains one of the largest players. And for good reason. I think they have a very, they have a good set of products. I mean, they understand the consumer very well. They understand risk very well in India. So I think the point is that it is changing at the margin. So if you see the last 12 months, the kind of traffic that now we are getting from smaller cities and the percentage of our business that is coming from, let's say, outside the top 6 big cities, if you were to look at it in that perspective, has increased, of course, it was a small base, but has increased by 150%. So what we are seeing is that clearly, the smaller town people living outside the big cities are now waking up to this opportunity. And again, to some extent, there COVID played a big part because, when the corner, as you said, the corner uncle was not there, then it was, possible for people to, or they had to, look at other means. So I think we are changing. The only point I'd like to make here is that in other industries where the transition has sometimes been much faster than perhaps insurance, it has largely been driven by incentives, right? So whether it was in e-commerce or in other areas where people, gave different kinds of incentives. Now in the insurance business, because it's a regulated business, there are no incentives, etc., that are allowed, which of course is a good thing in the long run. But I think it makes the process, move a little bit slower than it has in other areas.
Trust me, I would have had a lot of follow-up questions, but I just want to end with one more, which is perhaps very evident for our viewers, which is that life insurance companies have recently taken a price hike, and the logic given is that, look, in India the reinsurance rates were different after COVID. That has changed. But is the acceptance from consumer, because ultimately it's the consumer who will have to pay more for the policy?
So yes, you're right. In some cases, term insurance rates have gone up. I think at this point, if I were to look at it in an absolute level, I think the pricing is still quite attractive. Even if you compare it to developed countries, our rates are still quite reasonable and attractive, given the stage and the life expectancy in our country. So while, again, these are all things which are evolving and dynamic and, could have an impact as we go forward. At this stage, I would say that from a pricing perspective, Indian consumers are still in very good shape. maybe not in as good a shape as they were, let's say, 12 months ago. But still, if you look at it on an absolute basis, and if you look at the value that is being given, even today, you are able to buy a policy. Let's say if you're a 35-year-old, buying a 1 crore term cover, you're still getting that, in, probably 1,000 to 1,200 rupees a month. So that is still a very attractive price point. And I think, I think we see consumers continuing to, buy these policies. But having said that, of course, whenever prices go up, there is always a little bit of a challenge from a demand perspective.
All right, we'll have to leave it there. Thanks so much for joining us and taking us through some of those key developments.